Well, Rivian results are out, and Phil LeBeau has the numbers for us. Hi, Phil.
Hi, Morgan. Take a look at shares of Rivian, up around 3%. Why? Well, the company reported better than expected results, a smaller than expected loss of 65 cents a share. The street was expecting a loss of 72 cents a share. Revenue coming in slightly better than expected at $1.56 billion. It reported a gross profit for the third quarter, not a big one, but a gross profit of $24 million. That is 3 out of the last 4 quarters with a positive gross profit there. Gross margin of 2% versus negative 45% in Q3 of last year, with software and services revenue of $154 million. Compare that to negative or a loss of revenue of, $13 million in Q3 of 24. Then there's the guidance. They are essentially reaffirming across the board deliveries between 41.5 and 43.5. EBITDA guide, a loss of 2.25 to 2.5 billion, and they are on track for the R2 to begin production in the middle of next year. Let's bring in RJ Scaringe, CEO, founder as well of Rivian. Let's start first off. Smaller than expected loss.
Yeah.
How much of that is because deliveries were better than expected and pricing was strong?
Well, deliveries were strong, but importantly, our cost of goods sold, cost per unit produced, is among the lowest we've ever seen. So we really did a great job of continuing to drive efficiency into how we run the plant, to continue to drive efficiency into our bill of materials. And we see that with COGS of, very low COGS this quarter.
When you look at getting to R2 production and your liquidity level right now, are you confident you have the capital needed, or is there a chance of a capital raise in the first half of next year?
No, we're very focused on launching R2. As you see, we've got over $7 billion in cash or cash equivalents. So we're really well positioned for the launch of R2. We just built over 2 million square feet of new infrastructure in our Normal, Illinois facility. Some of that's for a body shop and general assembly. We also have a supplier park and a logistics center that's supporting the ramp up of R2.
Two things that worry people right now regarding you and all the automakers: rare earth materials and the discussions between President Trump and President Xi in China, as well as the Nexperia chip situation. Mm-hmm. Have you had to slow down production because of those?
With Nexperia, this is a really complex issue. It affects every manufacturer, every automotive manufacturer in the world. This is something we're very focused on. We're very appreciative of the work that President Trump and the administration are doing to resolve this issue with China. This has not impacted us yet, but I do want to say this is a big issue. As it pertains to rare earth metals, this is a complex long-term issue. And for us, we're both focusing on finding other sources of rare earth metals. So this is primarily for magnets, as well as developing solutions that require less rare earth metals.
Is there any chance that either Nexperia or the rare earth issue delays the start of production for the R2 in the middle of next year?
This isn't something we're seeing as a potential for delay in R2, just because of how we built and designed the supply chain and the readiness that's gone into preparing for the launch. In the more immediate term on Nexperia, it's just we do need to have this resolved. We are building lots of alternatives in addition to what comes through Nexperia today, but it's very much top of mind.
And real quick, strength of the EV market, is it drop off here in the fourth quarter?
Well, we saw a lot of pull forward in September with the end of IRA, and we're seeing now the lull, if you will, after that in October. But look, we think that long-term EVs continue to grow in terms of scale and market penetration. We hope R2 is a big part of it.